Right, so Benjamin Netanyahu has always had a talent for denial. Inflation? Well, that's temporary. Judicial chaos? Well, that's overblown. Genocide? A lie from the enemies. Corruption charges? A witch hunt. The startup nation, as Israel likes to portray itself, a contradiction in terms in and of itself when they claim 3,000 years of promised land, of course, was meant to be bulletproof, an economy booming, whatever the headlines. But at a finance conference in Tel Aviv, the mask just slipped. He told Israelis to prepare for isolation, for a closed economy, and in a flourish of absolute delusion, rebranded it Super-Sparta. Investors didn't clap, they ran. The Tel Aviv Stock Exchange has gone the way of the Titanic. Real estate shares have just buckled, and suddenly the myth of resilience looks like a bad joke. Sparta, after all, was a militarised state that eventually collapsed. One sentence, and the strongman who built his image on swagger turned into the prophet of decline. The only thing super here was the speed with which he just tanked his own economy. Right, so here's a mental image to start off with. A finance conference in Tel Aviv. Dusty, crusty stuff, isn't it? Benjamin Netanyahu, though, he's there, standing before the crowds. Normally he would be radiating confidence, as he does, boasting about Israel as the startup nation, telling his audience that markets will recover, that global investors still trust him, that the war is all under control. Normally he would stay within that bubble of denial that has shielded his premiership for years. But instead he let slip a line that reverberated far beyond the conference walls. Israel, he said, is entering isolation. The economy must prepare to take on the characteristics of a closed economy. In one sentence, all of his denial suddenly fell apart. One sentence, and the mask of self-assurance fell away, exposing the truth that markets, investors, and ordinary citizens had already been suspecting. Israel is very much sliding into pariah status, and it's going to hit them all in the pocket. So the fallout was instant. The Tel Aviv Stock Exchange dipped. The real estate index, already fragile from labour shortages after banning Palestinian labourers, and declining confidence, took the hardest hit. Analysts scrambled to interpret the words. Business leaders, normally cautious in their public criticism of Netanyahu, were aghast. Headlines in Haaretz and The Guardian described Netanyahu's vision as Super-Sparta, a jarring rebrand of the nation once marketed as an open, thriving startup nation. And of course the opposition have pounced all over it, as oppositions do. Investors watching from New York to London to Frankfurt all read the signal clearly that risk is rising, capital is unsafe, Israel is acknowledging its own isolation. And so the question arose, as a result, has Netanyahu tanked the Israeli economy with just one sentence? The literal answer, of course, is that one sentence alone is not going to topple any economy, not toppling Israel's economy. But the main reason for that is because the slide began long before. It began on October 7th, 2023, when the genocide of Gaza erupted, as it did, with the unprecedented ferocity we now know it to be. This is something that actually did begin on that fateful day. It was then that the economy began to buckle under the strain of the mobilization, and subsequently under all the sanctions and the boycotts and the shipping disruption and the reputational collapse, as we've seen play out since. But symbolically, that sentence matters more than any individual downgrade or quarterly GDP print, because words from the head of government are signals. Markets trade not just on numbers, but on confidence, on perception, on what leaders admit or conceal. And in that moment, Netanyahu admitted what he'd spent months denying. Israel is isolated, and its economy is no longer open, but closed. The success of decades of propaganda of Hasbara has now officially failed, and he's told the world that in a sense. That admission alone accelerated the loss of trust that is now dragging Israel's economy even further down. An economy you can argue was built on that propaganda there. So to see why these words mattered, it's worth tracing the decline that's preceded them. The economy had already suffered a dramatic contraction in late 2023 following October 7th. In the final quarter of that year, GDP fell at an annualized rate of roughly 20%, which is a staggering figure for a developed economy. Startup nation, my backside, they're 77 years old after all. But the causes were multiple and interconnected. The mobilization of some 300,000 reservists stripped the workforce of both labour and consumption. The ban on Palestinian workers, around 140,000 of them, devastated the construction industry, which has left cranes idle and projects frozen and costs spiralling. Consumers watching missiles fall on Gaza and the north closed their wallets. The economy, long touted as resilient, entered freefall. Tourism, one of Israel's most historically consistent earners, collapsed almost entirely. Foreign arrivals last year were down by 68% compared to 2023, with fewer than 1 million visitors compared to 3 million the year before. Hotels emptied, airlines cut routes, restaurants shuttered. The images of war, of bombed cities and burning refugee camps broadcast daily on international news channels and across social media destroyed Israel's reputation as a destination. No amount of Hasbara campaigns could convince tourists to board planes into a war zone, let alone a country now labelled by the International Court of Justice and the UN now as engaged in genocide. And at the same time, the government's fiscal position just spiralled. By 2024, the budget deficit ballooned to nearly 7% of GDP. The war was not a temporary expense, it was a structural burden now, with billions poured into bombs and tanks and security, while revenues shrank. The finance ministry itself admitted that the deficit would still hover around 5% this year, even if spending was tight. Israel's famed fiscal discipline, once a cornerstone of Netanyahu's political appeal, this has always been historically his selling point to get elected, was gone. Credit ratings agencies responded in just the same way. Moody's, Fitch and Standard & Poor's all downgraded Israel's sovereign rating last year, citing fiscal deterioration, political instability and the war risk. Worse, they left their outlooks as negative on top of that. That's a signal to markets that the slide was not over, that further downgrades might come, that Israel's borrowing costs would continue to rise. In the world of global finance, downgrades, they're not just technicalities, they shape the cost of credit, the appetite of investors, the willingness of funds to hold government bonds. For a country already spending billions on war, higher borrowing costs were another weight just dragging its economy down. The shekel itself came under intense pressure as well. On October the 9th, 2023, just 2 days after the Gaza assault began, the Bank of Israel announced an unprecedented $30 billion foreign exchange intervention, alongside $15 billion in swap lines. It was the first time in its history that the central bank had engaged in direct FX sales to defend the currency. This alone was symbolically catastrophic. Israel, which had prided itself on monetary stability and reserve accumulation, was suddenly burning tens of billions just to stop its own currency collapsing. Investors saw desperation, not strength. Meanwhile, the war extended beyond Gaza into the Red Sea. Houthi forces declared solidarity with Palestinians, started targeting Israeli-linked shipping from that November. Insurance costs soared, routes to Asia were disrupted, and by the middle of this year, the port of Eilat, Israel's only Red Sea port, its Red Sea lifeline, had collapsed into insolvency and effectively shut down. A whole port gone. A region cut off, an artery of trade severed. The closure was more than a logistical problem, it was a symbol of Israel's vulnerability now, reliant on sea trade as their economy is, of how quickly global supply chains could isolate Israel and still could further. The construction sector, already gutted by the loss of that Palestinian labour, continues to teeter. The government tried to recruit foreign workers, but most stayed away. They were fearing the rockets and kidnappings and all the international backlash of helping this pariah state, because of course they would. Therefore, projects have been abandoned mid-build, mortgages have stalled, prices have soared. Real estate was once the darling of the Tel Aviv Stock Exchange. It's become a liability now instead, no matter how many illegal settlements Bezalel Smotrich wants to try and finance. Even the tech sector, the jewel of the so-called startup nation, has faltered. Intel, long Israel's flagship investor, paused its planned $25 billion chip fabrication expansion plans last year. For a country that's built its global brand around high-tech innovation, the pause was a massive humiliation. And it signalled again that even in the most globally integrated and supposedly resilient sector as tech is, investors were no longer sure Israel was safe or stable. So all of this formed the backdrop to Netanyahu's most recent remark, and that sentence he's just come out with. Because markets already knew the numbers. They'd seen the GDP crash. They'd seen the deficit, the downgrades, the shekel intervention, the Intel freeze, the Eilat shutdown. What they had not heard until that moment was the Prime Minister himself admit that Israel was isolated, that its economy was becoming closed. That was why this sentence mattered so much. It turned a market suspicion into government policy. He confirmed it for them. So the reactions naturally came very quickly. So as all scornful as you can imagine. Opposition leader Yair Lapid called the remark insane, arguing that Netanyahu himself had created the isolation through his policies. Not wrong. Former Deputy Army Chief Yair Golan accused him of trading away the country's economic future for his own political survival. Very much not wrong either. Business leaders begged the government to stop spooking investors. Haaretz reported Netanyahu's frantic walk back, insisting he had been misunderstood, that Israel was not truly a wartime economy. But the backpedaling only reinforced the sense of panic, that he knew that he'd put his foot in it. Investors heard confusion, not confidence, and that is all it takes. So was this candour or was it carelessness? Was Netanyahu for once speaking truthfully, or was he trying to rebrand isolation as strength, selling it as Super-Sparta rather than admitting defeat? The answer is a bit of both. On one level, he blurted out what everyone already knew: Israel is becoming a pariah. They are cut off diplomatically and economically. On another, he tried to spin it as a virtue, a heroic self-reliance, a nation under siege but defiant. But the contradictions are glaring. Sparta was self-sufficient. Israel is anything but. It relies on billions in US aid every year, on German submarines, on American F-35s, on British software, on European trade. Despite international condemnation, arms and aid continue to flow into Israel from the US, from Germany, the UK, Canada, Australia, and others. So how can a state so dependent on foreign subsidies call itself Super-Sparta? It's closer to super-subsidy. And here lies the deeper weakness. If Israel truly is isolated now, then its dependence on foreign arms and finance becomes unsustainable. They become targets for boycotts and sanctions. If it's not isolated, then Netanyahu's rhetoric is just empty fear-mongering, and he's caused damage for nothing. But either way, the words collapse under their own contradictions. Investors can see it. Allies can see it. Ordinary Israelis paying higher prices and losing jobs can see it. The social consequences are therefore mounting. Ordinary Israelis face rising costs as deficits drive inflation. Tourism-dependent towns like Eilat, already gutted by the port closure, see more and more businesses shuttered. Construction delays push house prices further and further out of reach. The promise of prosperity of a modern open economy is dissolving. Young Israelis, told for decades they live in a startup nation, now hear their Prime Minister telling them to prepare for a closed economy instead. Therefore, they have a life of militarisation, of austerity and isolation to look forward to now. The ideological shift is a big one, from high-tech miracle to militarised Sparta. Is this really the future they want? But the irony is that Netanyahu himself built his career on economic success. He was the man whose finance minister slashed deficits and stabilised the shekel. He opened markets up. He sold himself as Mr. Economy, the safe pair of hands who could balance security with growth. And now, after decades of that myth, he's become the man who admits Israel must adapt to autarky, who presides over downgrades and deficits and capital flight and collapse. All to shield himself now, of course. It is the ultimate reversal. There is a historical resonance here. Israel has faced economic crises before: the hyperinflation of the 1980s, the dot-com crash of the early 2000s, housing protests in 2011. But never before has it faced a crisis so deeply tied to its own global legitimacy. Hyperinflation can be fixed with domestic reforms. The tech crash can be weathered with innovation. Housing protests can be answered with policy. But a crisis born of war crimes and genocide cannot be fixed without ending the war first. And that is the real difference today. Netanyahu needs that war to continue to protect himself. And he'll sink Israel if that's what it takes. And what are the global context? For decades, Israel enjoyed the protection of the US and Europe. But now, even as arms and aid still flow, the reputational cost rises. Courts brand it genocidal, trade agreements come under scrutiny, boycott, divestment and sanctions continues to gain momentum, shipping routes close, allies take to sitting on the fence rather than siding with them overtly. The contradictions grow sharper by the day. And this is why Netanyahu's sentence matters so much, because it was not just a gaffe. It was an admission that the startup state has ended, that Israel is becoming something else, a Sparta state, militarised, dependent, brittle and increasingly cut off. The word Spartan has another meaning, of course, one of being bare and empty. Whether he intended candour or spin, the effect was the same. He tanked confidence, exposed contradictions, and accelerated Israel's economic decline. So has Netanyahu tanked the Israeli economy with one sentence? Literally, no, because the decline was already underway, driven by war, genocide, and isolation. Again, all on him. But symbolically, yes, because words do matter. Signals matter, and when the Prime Minister of Israel admits to isolation, investors and allies and citizens take him at his word. It's not just the markets he spooked, it's the nation itself. One sentence crystallised a truth that can no longer be denied. The Israeli economy is falling apart, the illusion is broken, and the future Israel faces is not prosperity but pariah status and potentially financial ruin, and all for the sake of one man's career. It's little wonder, therefore, that with Egypt having put 40,000 troops outside the gates of Rafah, with all the war Netanyahu has been making lately versus Palestine and Syria and Yemen and Lebanon and more, that the thought of further economic strain, if he has another front to deal with militarily, is a bit of a headache. But such is Egypt's message to him after they unveiled plans by Israel to do to Cairo what Israel had just done to Doha. So get all the details of that story in this video recommendation here as your suggested next watch. Please do also hit like, share and subscribe if you haven't done so already, so as to ensure you don't miss out on all new daily content, as well as spreading the word and helping to support the channel at the very same time, which is very much appreciated. Holding power to account for ordinary working class people, and I'll hopefully catch you on the next feed. Cheers, folks.